Develop success from failures. Discouragement and failure are two of the surest stepping stones to success. Dale Carnegie. My friends, don't get discouraged. Don't worry about not getting this the first time, the second time, the 10th time, the 100th time. Keep at it. You will have victories, you will have defeats. But if you stick with it, you will get better and better and better and better. Every day, 10 to 15 minutes, that's all we ask. Just stay with it. You can do this. You know you want to do this. But the hardest thing to do is to do things consistently. I was at a physical therapist office today just working on some issues with the shoulder and some other stuff. And I was talking with him about the patients he treats that are successful, that avoid surgery, that get better, that feel better. His number one problem is getting people to do the exercises and the routines he gives them. They would rather take a pill or get cut on. And my friends, that is not the answer to health and the answer to trading and learning how to successfully invest and trade in the market. The answer is persistence. The answer isn't a one-shot, one-kill magic pill. You're going to somehow just magically figure this out without putting in the work. I'm not asking you to spend 4 hours a day. Not even 4 hours a week, 10 to 15 minutes a day, but it's got to be every single day. You can do this. Let's jump into the market. As we have seen things setting up, this market, this correction that could be underway, has been a long time in coming. We've had this divergence since we saw the price percent oscillator peak all the way back on the week ending the 7th of May. Market moved sideways and then slowly starting around, what was this? The week ending the 11th of June started, and then again it slid sideways again. You look at where the market had previously peaked, where the price percent oscillator had peaked, somewhere around, where was the high? 122.82. So about there. For those of you listening, I'm just running a horizontal line around the 122.82. When did it take off and move consistently above that? That wasn't until the beginning of July, the week ending the 2nd of July. Then it went up 2 more weeks, and then what's happened? We've seen with allegedly, the best I could figure is new COVID scares. The market all of a sudden took a hit today. A big down day as things opened, and of course down for the day 1.48% on the S&P 500. It was down a whole lot more during the day, but that's where it ended down for the day. Look at that price percent oscillator pulling away from the red signal line, derivative oscillator gaining downward momentum. Remember, we were in a confirmed down move. How many of you listened to what I said on Friday? And we're waiting to potentially pull a trigger on a 2-day recross going down at the end of the day, because that's when this latest candle ended. Did you listen and prepare over the weekend? Did you listen to the weekly review and forecast we put out on Friday? Were you ready to pull that trigger? I hope so. I hope so. Let's see how that goes for you. Doesn't cost anything to do a practice trade. We see that there's a confirmed crossover going down on the 2-day chart, what we call a recross, moving in the same direction as the already heading down price percent oscillator on the weekly. That weekly vertical crossover took place way back. And we see now the market perhaps finally adjusting down. The derivative oscillator still barely positive on the 2-day chart. Price percent oscillator confirmed crossover. What about the half day? We've seen this half day again gaining downward momentum over the last, 3 days now? And of course, what we saw happen on Monday was a real jam down in the morning, more down movement in the afternoon, but that wasn't the first time it started. It started back on Thursday. It started ending on Wednesday. Now that's just the half day, but we saw that weakening on the 2-day, didn't we? Maybe a little bit on the weekly, but particularly on the 2-day. We saw things starting to weaken, particularly on Friday of last week. We saw things slowing down on the 2-day, representing Thursday and Friday the 8th and 9th of July, and then again slowing down on Wednesday and Thursday the 14th and 15th of July, and then of course Friday, and then that huge move down on Monday. Hopefully you were there ready to pull the trigger on a practice trade. Let's go to the NASDAQ 100. It is still positive on the weekly chart. Price percent oscillator losing some momentum. Derivative oscillator losing momentum. Red down candle just busted right through that weekly trend line on Monday, didn't it? And what's up with the 2-day? We can see that it's violated the 2-day trend line, but still, even though there was a violation as far as the downward shadow or wick goes, candle didn't close below the weekly, and we haven't had a 2-day crossover going down yet. Derivative oscillator still positive too, so we'll keep an eye on things. Already gave you warnings about that trade and asking you how long you were going to stay on it when we saw this significant weakening. Now for the last 3 days, price percent oscillator on the half-day chart moving down, derivative oscillator. We can see where things slowed down on the NASDAQ 100 in the afternoon after the big drop. In the morning, it was down 0.82% versus the 1.48% of the S&P. That's where we are on our two big stock indexes. Let's go to bonds. What should bonds be doing? Going up, and they are. In fact, we have a nice big green candle forming for Monday, representing the first day of a 5-day candle. Price percent oscillator heading up, derivative oscillator heading up, price well above the weekly trend line. 2-day chart, again, nice big green up candle forming. Price percent oscillator pulling away from the red signal line. Derivative oscillator gaining upward momentum. Half-day chart, we saw it bounce over, heading up back on, I guess that was Friday morning. A little bit up Friday afternoon, and then a booming up on Monday morning and afternoon. Price percent oscillator, derivative oscillator gaining upward momentum. I tell you, since we had that 2-day recross back on the 20th of May, those of you who jumped in and have stayed in somewhere around the 136 point, and again, that was back on the 2-day recross back in May the 20th, Thursday. And what have we seen happen? We've seen it go from that 136 or so mark up to a high of 151.25. Bonds have, at least this 20-year government bond fund, have appreciated quite a bit, have they not, as far as the bond fund itself goes. Quite beautiful half day. We've already talked about that. So again, bonds just continuing to look good. That 2-day has treated us so well. Now, let's leave bonds up for the day, 2.19%. Bam! Okay, let's move away from bonds, go to gold. I noticed gold was down some during the day, but at the end of the day, up 1.20%. Now, let's go first to the weekly. Price percent oscillator still flat, going into the third week of some up movement. Again, rather tepid, I would say. Maybe by the end of the week we'll have the crossover. Not yet, though. Derivative oscillators about flat. Price percent oscillators flat. Go to the 2-day, and it actually did cross over at the end of the day. We can look here and see just barely, but it did actually cross over going up. So we now have the 2-day chart heading up. Not much of a head up, but it happened. Derivative oscillators going in, has finished its 4th day of green up movement. So again, hopefully that's going to turn around. Gold on the weekly at some point. We see on the half-day chart where things, we had some down movement. That's what I saw earlier in the day. And then it recovering, but that downward oscillation has sent the half-day crossing over going down on the price percent oscillator along with the derivative oscillator. So again, we'll keep our eye on things. Just enough oscillation to bring that 2-day in a crossover. Like we said, weekly still flat on gold. Maybe we've reached a bottom in gold and it will slowly but surely be turning up. And like we said, not a lot of up movement for the day, 0.12. What happened, my friends, with Bitcoin? Down 3.72%. And again, the bottom on Bitcoin, the lowest it's gone when it really bottomed out here most recently at 30,221. Where did it go? 30,706. So it's not hit the lowest point yet, but it is pushed through on this first day of this latest 5-day candle, pushed through the 50-period moving average line. So again, it had sort of bounced off that before, but it is managing to push through at this point. We'll continue to watch and see. Price percent oscillator heading down, derivative oscillator negative, losing downward momentum. 2-day chart looks like it's trying to cross back over, heading down. It's been somewhat laminated above, just above the red signal line. So we'll keep an eye on Bitcoin. But again, not looking so good for Bitcoin. That half-day chart, of course, has been negative for a few days, continuing to gain downward momentum. So again, hopefully we'll see Bitcoin bottoming out at some point. Hopefully gold has already bottomed out, but we've got to have that confirmation of the weekly vertical crossover going up. And again, bonds just continuing to fly. That 2-day recross going really well for us. Of course, we see some weakening in the Qs, the NASDAQ 100, and of course, lots of weakening 2-day recross going down on the SPY. Hope you practice traded that baby today. That's where we are, folks, as we end the day on Monday. Hope that you have a great week with us. 10 to 15 minutes a day, that's all we ask. Thank you for everyone purchasing the book. And for the Patreon members, hope you found some good weekly vertical crossovers. We supplied you that list of 11 this last week. Hope you found some good ones to practice trade. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.